All right, welcome back to my channel. How you doing today? Today's video, we are going to look at how to read currency pairs, and then we will look at how to read price. What is a pip? How do we count them? And finally, we will understand price quotes. You may have heard these terms. What is the bid, the ask, and the spread? So yeah, all these three topics will be in this video. And by the end of it, you should be able to understand all these and have a good grasp on them. All right, so let's get right into this. So first thing, reading currency pairs. We have this one right here. This one here is going to be the dollar CAD, sometimes nicknamed the loonie. In this one here, as you can see, we have two different currencies. We have the US dollar and the Canadian dollar. We also have a base currency, which is going to be the US dollar. And then we have the quote currency, which is going to be your Canadian dollar. All right. So your base currency is always going to be the first one, and your quote currency is always going to be the second one in the pair. Now, to understand these, basically, if the base currency, the US dollar, is gaining value, price will rise in this pair. All right. And similarly, if the quote currency, the Canadian dollar, is gaining value, price will fall. All right. So that's very important to know. If price is rising in this pair, the US dollar is gaining value. If price is falling, the Canadian dollar is gaining value. All right. So we're going to do a quick practice. We have this one here. Which one is the quote and which one is the base currency? I'll just give you 1 minute there, or a couple seconds. All right. So if you said the quote currency was the US dollar and the base currency was the euro, you were correct. All right. Now, which one, if price is rising, which one is gaining value? And if price is falling, which one is gaining value? All right. If the US dollar is gaining value, price will fall in this pair. And if the euro is gaining value, price will rise. All right. So next thing we're going to look at is what is a pip? All right. Well, it's a point in percentage, which is what pip stands for. All right. It is a unit of measurement to represent the changes in a currency pair. All right. So you'll see different quotes based on where price stands within that currency pair, and it just measures where it is. All right. It is normally represented by the fourth decimal place. All right. So 1 pip is going to be your fourth decimal place. All right. And then this is kind of important because all Japanese yen pairs are going to be a little bit different. You're not going to read them as the fourth decimal place. They're going to be the second decimal place. So you'll notice these prices that are quoted are going to look different, and that's because of this right here. All right. So the example of that, the JPY 1 pip is the second decimal place, not the fourth decimal place. All right. So now reading price. So here we just have a basic quote. This one here is the US dollar and the Canadian dollar. So the dollar CAD that we looked at earlier. This is the current price it closed at on Friday. All right. So we have 1.41092. All right. So this one here, on some brokers platforms, you'll see this quoted. Not all of them will display this number here, but what this one is, it's actually called a pipette. All right. So anytime you see a fifth decimal place, that's what they are. They're pipettes. All right. And when these increase to 9 and then roll over one more, this will roll over as well. All right. So now the next one, the 9 here, this is going to be 1 pip. So anytime this moves, let's say it went from 8 to 9, it moved 1 pip. All right. And then the next one here, This one is going to be 10 pips. So if it moved from a 0 to a 1, it moved up 10 pips. If it moved from 0 to 2, it moved up 20 pips. All right. And then this one here, this is going to be 100 pips. So anytime this one changes, let's say it changed from a 1 to a 2, it moved 100 pips. All right. So this is your basic understanding of increase and decrease in price. All right, so now we're going to do a quick practice exercise on that. So we have a basic price here. This is where the euro dollar currency pair that we also looked at earlier, this is where it closed on Friday. And this here is just a random price that I selected myself, and we're going to practice. So based on this here, how much did this either gain or lose? I'll just give you 1 minute. Got it? So based on this one, which numbers actually changed? Well, we got those two there. So if you said 120 pips, you were correct. All right. As you can see, this one here changed from a 1 to a 3. So that's 20 pips. And then this one changed from an 8 to a 9. So that's 100 pips. In total, we have 120 pips. All right, so the next thing we're going to look at is understanding price quotes. So here we have a basic quote from my broker, CMC Markets, and this is the Aussie dollar. This is how it closed on Friday. All right, so in this, you see a few different numbers. This one here is going to be the selling price, also referred to as the bid price. All right, and then we have our buying price, which is our ask price. And then this number here, right here, the 0.7 is going to be our spread. All right. So based on this here, price is actually quoted in the middle of these two numbers. So that's the, like if you pull up a chart, you'll see price quoted right in the middle of these two numbers. And then this is where if you wanted to buy it, you would pay this price. All right. If you wanted to sell it, you would pay this price. All right. And as you can see, you might have already noticed this. The spread is the difference between this one and this one. So because it's not 1 pip, it's 0.7 of 1 pip. It's going to be in our pipette number here. Remember, we said our pipette was our 5th decimal place. So yeah, we're going to have a 0.7 difference in price between these two quotes. All right, so we're going to do some skill testing questions just to see if you got a good grasp on this. If you do happen to get any wrong, just rewatch the video, pause the slides. And this is very important to know if you're going to start trading. So yeah, make sure you got a good grasp on this before you move forward. And yeah, if you want to grab a piece of paper and a pen, by all means. If you want to just take mental notes, we'll get right into this. So question number 1, which currency in the pair is the base currency? Is it A, the first one, B, the second one, C, neither, or D, what's a base? All right, you got your answer? You got it written down, got a mental note of it? All right, let's move on. Question number 2. If price is moving down, is the quote or base currency gaining value? Is it A, the base currency, B, the quote currency, C, both of them, or D, neither of them? Which one? You tell me. All right, we're good. Question number 3. What does PIP stand for? So PIP, what do those letters actually stand for? Is it A, point index percentage, B, point in percentage, C, percentage in points, or D, price in percentage? This one's a little tricky. Hope you're paying attention. All right, so we'll move on. Hopefully you got your answer ready. Question number 4. What is another term for sell? Is it A, bid, B, ask, C, spread, or D, buy? This one should be easy, but if you weren't paying attention, maybe not. All right, good to go. Last question, question number 5. What is the spread? Is it A, the difference between the bid and the ask price? Is it B, the cost of purchasing? Or C, your broker's commission cost? And finally, D, all of the above. This one's a little trick question because we kind of didn't go over a couple of things here, but you should be able to get it. All right, these are our answers right here. So question number 1, it was the first. All right. Question number 2 was the quote currency. Question number 3, PIP stands for point in percentage. All right. Question number 4, if you're selling, it is the bid price. And question number 5, it is all of the above. So yeah, your broker will charge a spread, and that's basically the commission. In stocks, they charge actual commissions. In Forex, it's a spread based on liquidity levels. So if liquidity is low, you will pay a higher spread. All right, but that's a little bit more advanced for this video, but I hope you got a good grasp on everything. Like I said, if you didn't, just rewatch this video, take it a little bit slower, maybe pause it if you need to, and yeah, understand these concepts, and then you can go on to learning some new things. All right, and hopefully this helps you get a good grasp on price, pips, and your basic quotes. All right, so I hope you enjoyed this video. If you liked it, give it a thumbs up. Remember to subscribe to my channel. Hit that bell as well if you want to get notifications for new videos coming out. I will be posting more content that I hope helps you in your trading and your new career, if that is what you want to do with this for real. All right. So anyway, hope you enjoyed it. Happy trading, and I will see you in the next one. Take care.